What a week it has been. First, just start with Wednesday, okay? President Trump and EU Commission President Jean-Claude Juncker surprising the markets by announcing a breakthrough in the trade tiff between the U.S. and a bloc of 28 European nations. But then almost at the same time, Facebook reported really junky earnings after the bell. Same day, Wednesday, which hit the NASDAQ and the S&P as soon as the markets opened yesterday. And then today, this is, I don't know, I got to call this a classic what have you done for me lately market. Major indices are selling off, including the Russell, as we showed you, even after a robust advanced second quarter GDP number of 4.1%. How does this compare to the last 12 years of GDP numbers? Well, it is the fastest growth we've seen since you'd have to go back to the third quarter of 2014, when under President Obama, the economy grew at a 5.2% rate. Larry Kudlow, director of the Economic Council this morning, painting a bright economic picture ahead.
This is a boom that will be sustainable. Frankly, as far as the eye can see, this is no one-shot effort.
As far as the eye can see. So why is the market belly aching in this final hour of trade? To the floor show, we're joined by former Congressional Budget Office Director and American Action Forum President Douglas Holtz Eakin and our traders at the New York Stock Exchange and the CME Group. Doug, I want to start with you. On the surface, 4.1% looks like a very welcome number. I'm sure you would agree, but can you dig a little deeper with your trained economic eye and tell people what you see that might be problematic, that it might be a reason behind the markets not jumping here?
Well, I think if you look inside it's a solid report. I mean, there were concerns that it would be driven by one-time factors like soybeans or inventories. On balance, that's not true. Net exports bumped up, inventories bumped down. The core spending is household and business spending. That looks very strong. There was nothing bad news in the revisions, so we don't have our economic history wrong. So I think this is just the old saying, buy on the rumors, sell on the news. It was a good number. But the markets are down a little bit.
And by the way, let's not underestimate the upward revision that we saw with the first quarter. Yeah. It was upwardly revised to 2.2% from 2%. Chris, Doug touched upon soybeans. I know a lot of our viewers might have said, well, wait a minute, what happened? Because that maybe looks like a little bit of the growth was really spurred ahead of what could have been these and what are the trade tiffs with China. Talk about how that plays into it, because intraday, the soybeans look pretty healthy.
Well, I think if you have to go back to the beginning of the summer, Memorial Day weekend, soybeans were over $10.50. That started a 6-week slide where we lost 20% of our value. So I don't know if that's been factored in yet into the GDP. I mean, at the end of the day, it's 4 billion bushels of, in a $1 trillion economy. So I don't know if that would have been taken that big of a hit. But obviously, for the 1% of the farmers out there, 1% of our population that's a farmer, to watch the value of an asset drop 20% in 6 weeks is painful. So I guess that's some of the pain that we were told we had to expect to hopefully get a better deal down the road. But I don't know if it really impacted GDP, not in the size economy we have.
Tim, can you tell me what's at work with the Russell 2000 small and mid caps? Is this simply they've had such an incredible run up that people are taking profits here, or is there something more to be seen?
I think that's a big part of it. There's been a number of times in the last half a dozen years when the Russell peaks close to its end of June rebalancing. The Russell was right up about 1,700 then. I don't know specifically what's going on with it today, but the rest of the selling in the market is heavily driven by tech, with Intel down close to 10%, and with a lot of selling and a lot of the social media names that have had and subscription names that have had just really hyperbolic rallies for the majority of the year. It's certainly not a broad market rout. I mean, down volume is not even 50% higher than up volume. You'd expect it to be maybe 3 or 4 times higher with this type of a move in the averages.
Doug, I don't want to rain on anybody's Fry-yay parade, but we also got University of Michigan consumer sentiment. And it did take a dip. It was better than expected, but it was definitely down. And when you look at that number, a lot of people within the survey reference the concern about the trade wars. We know that if there's a deal or something brewing with the European Union, there's still a battle with China. On top of that, let's just talk about what Larry Kudlow said. And that was that as far as the eye can see, this thing looks great. This economy looks like a train as far as the eye can see that will continue chugging ahead. Do you see that, considering that we saw from the Treasury Department that the tax cuts, which appear to be juicing this economy, also have shown that we have seen a third drop in corporate tax receipts coming into the Treasury Department.
Right.
It's a 75-year low. We're not getting a lot of money into paid taxes.
Well, I think if you look at the GDP report, you see the good news. You see the strong household spending. You see the strong business spending. You see the prospect of more coming online in the business sector as people adjust to the new tax laws. At the same time, the tariffs are just bad news. There's the promise by the administration that the near-term pain will lead to a world with fewer trade barriers, lower tariffs. If so, that's great. But to date, that hasn't happened. There's just bad news, and that makes people nervous. And you've seen the confidence come down. You've seen people worry about the riskiness of this strategy. And past the trade risks, you have the budget deficit, which is a real thing. It's $1 trillion. No one's paying attention to it right now. Something is going to have to be done, and there's no plan on the table. So I understand why people can look at this and say, this is great right now, but, because there's some buts out there. I mean, you got to think about it.
Yeah, I think we had the federal deficit clock. Can we show that and just check in? Because that is important. You know, we did get that indication, Doug, that it would be bumping up against $1 trillion well before we had originally thought it would.
Yes, absolutely. That's it's a concern for a long time, in my view.
Yeah. Okay. Well, that's actually the debt. But we're getting close to $1 trillion for the federal deficit. Great to see all of you guys. Doug, Tim, Chris, Friday. Try and have a good Friday and a great weekend, gentlemen.